All right, so it is time for another market update, and really the purpose of doing these, and they'll be, probably sometime between the 10th and the 15th of the month. It takes us a little bit of time to get the data for the prior time periods, but just to come to all of you with some good information about some local market statistics and trends and what's going on in the real estate market, and also some national statistics, so that you really have a good understanding of what's going on a microeconomic basis or macroeconomic basis and a microeconomic basis. And then to also, if you ever have any questions at all about a home you're looking to potentially sell, or you just want a market value on the home, we are more than happy to do that for you. There's no obligation whatsoever, and really just to come from contribution and just keep you abreast of what's going on in our market. And I will, it's funny, my wife makes fun of me. I actually proposed to my wife in a PowerPoint slide presentation. And you guys can make fun if you want, which is cool. Do it in the chat below. And she said yes, and totally out of my league. So I had to make sure I prepared my thoughts. And so that's why I have slides to keep me on track. And then I'm going to jump into just some local statistics, so you can get an idea of the kinds of tools that we have access to help you get a good understanding what's going on in where you live. Maybe you're in Mecklenburg versus Union. Charlotte, Charlotte proper has different dynamics than Weddington, Waxhaw. Up at the lake, we have market reports on specific areas. And here's the thing: pretty much every season we come out with a seller and buyer guide. And the summer edition seller and buyer guides, we just got finished with them. And email us at marketing@hprea.com. There's no obligation whatsoever. We'll send these out to you right away. And so make sure you email marketing@hprea. And if you stay until the end, I've got a special offer. It's not a gimmicky type thing. There's no hype or anything like that. I've just got a fun thing to keep you until the very end. And there's all good information. So I'm not selling you anything on this market update, but stay until the end. I'm going to start out with a quote here, just to kind of give some perspective where we are in the market. We've got interest rates, coming up. Really, they've already had 2 hikes this year, and we've got 2 more planned. And so Arch Mortgage Insurance made this quote here. So they said, even recent interest rate increases and higher taxes on some upper income earners didn't slow the market. So originally, when they had some of the tax changes and interest rates were increasing, it didn't slow the market like many thought. So as many had feared, short of a war or stock market crash, housing markets could continue to surprise on the upside for the next few years. So politics aside, who knows what might go on in terms of stock market, irrational behavior, some world event that we get wrapped up in. But that's a good thing, right? There was some thought that we might have some implication in the housing market for the tax changes that we saw in December, and they hasn't changed the dynamics at all. And it's driven by supply and demand. It's just like any other market. Buyer demand is increasing. So this is a year over year comparison. So in March, there was a 5.7% higher demand from buyers based on traffic, and sellers were, there was less available inventory, 7.2% less compared to the month of the prior year. And you can see on the seller side, even though the rate is decreasing, so December was an 11.1% decrease in the amount of inventory available on the sell side, so listings available. It's decreased by comparison. It's still in a deficit, so it's still gone down from last year. And buyer traffic was coming down a little bit, and there was an uptick in March. So it's just a matter of supply and demand, and that's here locally as well. Price changes, we'll go over this every month, and just give you an idea what's going on around the country as well. There is not a market where there isn't an increase in pricing. Even Delaware, I think is the lowest, is 0.6%. The Carolinas were in the low 5% increases. You can see some of the West Coast areas are 7, 8, 12%, 11%, Idaho. Unless you're moving out there where home prices are crazy, It doesn't have much of an impact on us, but at least it gives an idea of what's going on in the country. And these are the forecasts. So we 5.2, 5.3 in the Carolinas increase. We're forecasted to still increase over the next year, a 4% increase, which is good. Home prices continue to rise across the country with expectations for continued economic growth and further employment gains. The current run of rising prices is likely to continue. And it's not so much that I'm here to give you advice on, if I had a crystal ball and I knew what was going to go on with the market, I wouldn't be doing this, right? I'd be filthy rich. I would have predicted every downturn and upturn and invested accordingly in the stock market and all of that stuff. So that's not what this is doing. It's just to give you an idea of what some of the experts are saying about the impact of different dynamics, interest rates and inventory, and how home prices in the future. Some people do actually try to time the real estate market, and it's nearly impossible. And so there are some things that are happening, which, even if you're trading up, so you're selling the home you're in, you're trading into a bigger home for, specific circumstances, or you're a first-time buyer, waiting now is a tricky game because prices are going up and interest rates are going up. With ongoing job creation, wage increases, and rising household formations, we can expect continued gradual strengthening on the housing market in coming months. And if you could see here, year-over-year price change by price range, you could see that lower price homes, so entry-level homes and lower to mid-range homes. And in Charlotte, our low price homes are probably less than 200. There's just not a whole lot of inventory available. And as soon as they go on the market, they sell. And that's driven those price homes up. So this dynamic we're seeing true. All price ranges have seen increases over the last year. The lower priced homes have seen a more dramatic increase. So could make an argument for a trade up seller. So selling a $300,000-$400,000 here home locally, and you've sort of outgrown that home, where you want to trade into a bigger home, it makes sense if you really can see the dynamic of that home you're living in now has seen more dramatic price increases than a potentially higher price home that you might be looking to trade up into. So first-time buyers continue to make up an underperforming share of the market because it's not because they don't want to buy. There simply isn't enough homes for sale in their price range. So that is absolutely true in Charlotte. Supply conditions improve in higher up price brackets, which means those trading up should see considerable interest in their home, as well as more listings to choose from during their home search. A lot of talk about a housing bubble. So what it was 11, 12 years ago at this point is when, really a lot of the stuff was shaking out with just the cruddy lending standards of the time and the junk loans and all of that stuff was kind of coming out, and markets were shifting around the country. We didn't experience a shift here until 2008, really, the end of 2008. So we're 10 years in at this point from that shift. And so I want to go through some things here, just some thoughts that experts have around, why this might or might not be any indication of a bubble. And CoreLogic, we follow Frank. He's a chief economist for CoreLogic. He says, even though CoreLogic's national home price index got to the same level it was at the prior peak in April 2006, here's the thing. I want to spend a little bit of time on this to make sure you understand this. The peak was April 2006, right? And the home price index is at the same point it was in 2006. Once you account for inflation over the ensuing 11 and a half years ago, values are still about 18% below where they were. So if someone tells you that home prices are where they were last peak or last bubble before it burst, make sure you tell them, yeah, but once you account for inflation, we're actually 18% below where we were. So it's not a real statistic. And news, national news or no, local news, they don't get this deep. They'll make comments and they don't have the facts. So make sure you do. And the other point here is that the debt service ratio for mortgages is near the low for the last 38 years. This ratio increased rapidly during the housing bubble and continued to increase until 2007. With falling interest rates and less mortgage debt, the mortgage ratio has declined significantly. And you can see here, this goes back to 1980, so 38 years ago. is when we had the same levels that we do now. So you can see the housing bubble, so housing debt service ratio as a percentage of disposable personal income. So you take the debt service dollars divided by the disposable personal income, and that's how you come up with this number. And basically today is where we were back in 1980, and it's the lowest it's ever been in that 38-year time period. So just think of that as you hear conversations about, bubble prices and, available inventory and prices going up. It is a supply issue for sure. It's not a bigger dynamic that we're seeing here. And here's another cool stat. Over the last decade, so going back to 2008, real per capita mortgage debt decreased 21%. So a 21% decrease in per capita mortgage debt. Home equity revolving debt, so that's like a home equity line, decreased 47%. And mortgage payments as a percentage of per capita income decreased 36%. So this is going back to before the bubble burst in 2008. And three stats here. Per capita mortgage debt decreased, home equity revolving debt decreased, and mortgage payments as a percentage of per capita income decreased. So combined with historically low interest rates, low delinquency rates, and a relatively stable housing market, there is little immediate cause for concern regarding these numbers. And probably there was a study done by Arch Mortgage Insurance that said, what's the probability home prices will be lower in 2 years? Looking out to 2020, right, 2020, what risk is there? So if it was a high probability, we'd see red. Light blue is a moderate probability. And the darkest color, which looks like 1, 2, 3, 4, 5, 6, 7, 8. So it looks like 42, 50 minus 8. 42 states have a minimal probability that home prices will be lower in 2 years. So if you're thinking like, let me wait, prices seem pretty rich, you're gonna see potentially interest rates go up and home prices go up. And if you're thinking the same thing about, trading up, you're gonna see the same dynamic, where now there's more interest in the higher price points, where, historically there hasn't been. Mortgage rates, this is since the beginning of the year, they've climbed a good bit from just under 4% to just over 4.5%. Housing affordability is another conversation piece, and it's in the news. So I want to make sure you guys understand what this means. These are different time periods going back to 1985, where housing affordability, if it's a higher number, that means homes are more affordable. And so basically, you can see in the bubble, that's where a low number means that homes were not affordable. And so what news might say is that housing affordability is down, right? Okay, so I'm putting my hand over everything from 2005, 2007, and I'm saying, whoa, housing affordability is down. And a news channel has picked up a story like that. Because their news, fake news, any news, I hate news. They want to create drama. They want to instill fear. And they would say that housing affordability is down, right? 172.4 to I literally still have my hand over the thing here, to 166 to 159.6. If you look at the rest of the chart, it is still way more affordable now to buy a home than it was back in, certainly in the bubble, but even when you look back, to 1985 to 89, that was our last bubble craziness. I guess outside of the tech, like late 90s is when some crazy stuff happened in the stock market. But you've got to look at a historical perspective on some of these things, right? Housing is still really, really affordable. You look across the country, unless out west, it's like we said, the lower the number, the less affordable. So the higher the index, the more affordable. Unless you're going to move to the Midwest, we're in good shape, in line with what the country is showing. And another thing too that news probably won't tell you is that incomes across the U.S. and regionally are up year over year. So in the South, we went from 64,000 to 68,000, a $4,000 increase in income, which is roughly roughly $300 a month. And so there's more income available, not just for disposable income, but to put into your housing payment as well. Rents, there is no good story with rents. So if you're in a rental situation, unless it's, you're temporarily in Charlotte and, I don't know another reason why you wouldn't want to own a home, but make sure you're checking the strategy if you're in a rental situation. Rents continue to climb. If you're a millennial, this stat scared me. So by the time you turn 30, you will pay close to $93,000 in total rent. And 23% of millennials reported rising rent as a trigger for their purchase. So if you're a millennial, bad situation there in terms of just making someone else rich, right? You're making the owner of the home that you're in or your apartment complex really wealthy, and you could be turning your rent payments, your housing payments, into net worth for yourself. So monthly increase in home values after a stable report last month shows that demand for the few available homes for sale ramped up in March. The true test will be whether more homeowners decide to take advantage of their higher home value and provide some much needed inventory for buyers. So we are desperate for inventory. Like if you live in a home and it's in really any price range, 2 to 500, and you've thought about a trade up, 2 to 500 has appreciated more rapidly here locally in the last 2 to 3 years than 500 to 750. So it's not the same market. A lot of people think that they're trapped in their home because what can they buy? Everything is appreciating. It's not the case. So if you're thinking about it, we could just do a quick home equity evaluation, but also look at an area that you might consider to move to. So just something to consider there. Let's see here. So distressed sales is a non-issue. Every market has, just people have issues that come up in life, and short sales and foreclosures are a part of any market, down from 35% to less than 4%. And here's what we're seeing is a lot of buyer traffic, strong and very strong in North and South Carolina, all across the country, super strong, and seller traffic weak in both North and South Carolina. And for some crazy reason, Wyoming has strong buyer traffic, but also strong seller traffic. It's the only state that has strong seller traffic. So that's our story, is that we don't have the inventory we need. Our database, we've got 60,000 buyers in our database, anywhere between about 6,000, about 10% are active in a given period of time. Just coming back on the site and searching for homes. I think last month we had like 25,000 properties viewed on our website. So we've got the interest there. The inventory is not there. So again, if you're considering, reach out. We talked about mortgage rates. I'm not going to beat that dead horse. They are projected to increase. The comment I'll make here, though, is that it's relative. I am not the guy that ever says when I was young, I walked uphill both ways, to and from school in the snow, uphill and all that jazz. But back in, I think I bought my first home. It was an investment property in 1997. I think it was. I'm 44 years old, so I'm not like an old guy. I'm not young either, I guess. And I remember I got like an 8.7% interest rate. I remember it went down to 7% on refinance. I ended up selling that home. And then I remember when it kind of came down to 6%, I'm like, oh, it's really, really amazing. I did some real estate investing here locally, and I got some homes in the 6% range. And I remember refinancing all of them at like 5%. And I'm like, man, it hit 4%. And so just remember that like a 6% money is super cheap. And you're building equity on the money. So it's not like, you're making money on the equity you have in the home. So if you buy a $300,000 home and you put 10% down, your equity is building on the 30,000, not the 300. So your equity can go from, if the home goes from 300 in 5 years from now, 25% increase, that's what? 25% of 300 is 75, so 375. You turned your 30 into $105,000. So you're building equity on equity. You're building net worth on your equity, even though the total price of the home's appreciating. So I don't know why I just told you that story, but it's just something to consider. A lot of people think that they have to have a high, super high off the charts credit score, 800 plus. It's just not true. 53% of loans have been in the 600 to 749 FICO score. So if you think you're credit challenged, don't make any assumptions. Reach out to us. There's no obligation to take you through the home buying process and give you tips on, it's really helping you save thousands and thousands of dollars in a home purchase. Let me go through some local statistics. I'm going to stop the share here, and I'm going to pull up some local stats for you to really give you a flavor for the type of information that we have available. And you can email marketing at HPREA, and any of the stuff you see here, we can get super micro level information. So this is like a broad level tear sheet on the market it's our April update for the Charlotte MSA. This is 7 counties, 2.2 million people. It's neighborhoods out in Gastonia, out in Midlands, in York County, in York, South Carolina, and Charlotte proper. So you can see the kinds of things that we track and the type of information that we have available. You can see new listings year to year are up, down for the year, but up in the month. I'm gonna go through some of the year-to-date stats over here. You can see that pending sales are up 5%. Closed sales are basically a wash year-to-date so far across the MSA. Median sales price and average sales price. This is always a tricky stat because you don't know the mix here. So median sales price could mean that we have a shift, like we discussed earlier, to higher price home selling. The average would account for that, a little bit. Either way, prices are up. A percentage of original list price received. So it's the same, and this is basically if you list your home for $300,000, even if you have price reductions, this compares your ultimate sale price to the price it was originally listed for. List at close, that's 96. Days on market, so that includes the contract to close. Once you go under contract to the closing, days on market, our average is 44. And cumulative days on market includes properties that didn't sell the first time that ended up having to relist. So this is just cool information. It gives you a historical trend of pricing. Let me show you what it looks like here and the kind of the cool, interesting data we can. So you can pull up, I guess they don't have it for all the different areas, but so for Waxhaw, we can pull up the report and we can see I live in Waxhaw. And we can see, just individual stats for most areas we have the stats for. You see prices have gone up. You see the average price for Waxhaw is pretty decent price there, increased to 400,000. Days on market are a little bit higher than the market overall, so 66 days. Let's pull up here, Metro. Let's see Uptown. Who's living Uptown? So we've got a tear sheet Uptown, and we can literally just email these out to you if you have any interest in looking at these. You can see the average sales price is $325. It's actually down, which is interesting. The median price is down as well. You can see the days on market are 55 and 96.3% original list price received. You can see the pricing Uptown is kind of all over the place. You can see the market, that's when a big shift happened back in late 2008. You can see the prices went down from the 300 range to the 200 range, and then it stayed there. The recovery was that, 3-year period, really 10, 11, 12, big recovery years, and then we've just been kind of fighting back there. But remember the comment earlier, if you take inflation into account, we're still 18% behind. So we're not even Uptown Charlotte isn't where it was, and that doesn't account for inflation. So really, really interesting statistics. That's we always have the ability to drill into any area. We can look at any statistic. So we can look at month supply over historical trend. we went from 5.7 months back in January 2007 to we're basically at that same level. You can see price, you can see number of closed sales. So we were up at 60,000 closed sales back in 2007, and we've had, similar amount here recently. Yeah, so it's just really good information that we can share with you if you are even remotely considering a move. I'm not going to spend a lot of time on this, but if you love numbers, a lot of you don't love numbers, so that's why I showed the graphical stuff. But we have a breakdown. We could do a breakdown literally by zip code, by neighborhood, the active, pending, expired, off market, and sold listings and all the statistics around it, which is really, really cool. So you can see, I'll point out a couple of things that, here, let me show you. So in the 200 to 220 range, let me highlight that. So there are 272 active, but 493 pending. That means there are more homes in the 200 to 220 range that are pending than active, which is crazy. Let me compare it to, so there's almost twice as many pending as there is active. Let me compare it to, the million one to 1,000,002. You could see there's 159 active and 32 pending. There's 5 times more active than pending. And the opposite was true. There was 3 times more pending than active in the lower price point. So just interesting dynamics. This indicates in no uncertain terms that depending on where you're priced, if you have a home to sell and you're looking to trade up, the dynamics aren't the same at every price range. So it's tough to take a little tidbit about a certain area of town, a certain price point, and say, oh, my home will sell quickly or it won't sell quickly. Unless we do a custom analysis, it's sort of a tough assumption to make. And then we've just got some other cool stuff. I'm not gonna go through this. I'm a dorky numbers guy, so I can spend all the time in the world going through those numbers. All right, so that's about all I've got, and I'm gonna finish it out here. And I know, and any statistic that we quote, any quote that we quote, any slide that we talk to, anything we talk about on these market updates, we always have the data to back it up. So make sure if you have any questions whatsoever, I can literally email you the link to the report. If you want to go deeper on it, there's articles you can read. If you want to geek out on some of this stuff, we totally get it. And this is kind of our thing, hashtag see you at the closing table. If you're thinking about doing anything, making a move, we just want to be part of the process. We want to be able to give you expert advice that puts you in control of the situation and gives you the information that you need to be confident about the decisions you're making with your home sale, with your home purchase. That's really what we stand for at High Performance Real Estate Advisors. It's not so much about us. We want to deliver this amazing experience to you and also give you the information you need to be really confident that you are getting the most amount of money for your home if you're selling it in the least amount of time with the least amount of hassles. And if you're buying a home, getting the most amount of home for your money, and doing it in a process that's really, really enjoyable, especially in parts of town where the market's super tight. So go to highperformancerealestate.com if you want to get a free home equity evaluation. There's no obligation whatsoever for that. Email marketing@hprea.com. The new summer guides are out for buyers and sellers. Take us up on that. And you made it to the end. So kudos to you for making it to the end. So here is, this is one of the best books. It's by Gary Keller. So High Performance Real Estate Advisors is powered by Keller Williams. And achieving anything in your life, whether it's in business or personal, it comes down to one thing at a time. And so the quote here, let me see if I can find it. It's like the one thing, if you could do one thing that'll make the next things easier, what would that be? So for the first, what's the one thing you can do this week such that by doing it, everything else would be easier or unnecessary? And so, and it's the domino effect. So one thing at a time, you know, small domino knocks over the next one. So for the first, let's say, how many people? Let's say 10 people to email marketing@hprea. We'll just need to get your address. We'll physically mail you a copy of this book because it is such a good book. We have extras here in our office. Our team members are required. This is required reading before they even start on our team. And that another thing too, email marketing@hprea. If you are considering a career in real estate, we have a paid training program. We're looking for, you can see actually behind me, we're looking for a very specific person. I'm going to duck out of the way. Someone who hustles and works hard, they embrace accountability and discipline, you bring a positive attitude, a growth mindset, you're a team player, and you do the right thing. If that is you and you've considered a career in real estate, reach out to marketing@hprea and we'll get you in touch with we've got someone that heads up our talent acquisition department, and they'll be happy to talk about career opportunities. If you're a salesperson, we have an 8-week training program where I'm pretty sure every brokerage, every team here in Greater Charlotte, none of them have a paid training program. So we literally pay you to learn how to develop new business in real estate at the highest level. So that's another opportunity for you as well. And if you know someone who might be considering a fast-paced career in real estate, make sure you send them over to us. All right, that's all I've got for you. Much love, much respect. First, what did I say, 10? I think I said 10. First 10 to email marketing@hprea.com. We will send out the One Thing by Gary Keller, and we'll see you guys next month. So long.